Now, as we've just reported, the impact of tariffs between the US and China won't be restricted to only those two countries. So, to examine the possible global impact, I'm joined by international business executive Ryan Patel. Welcome to the program, Ryan, from California. We just reported on the fact that countries have high levels of global trade integration and that they might be most at risk from a trade war. But do tell us a bit more about how global value chains work and how businesses and economies will be affected if this goes on for much longer.
Yes, I mean, obviously you mentioned some of the countries from like a Singapore, like a South Korea, where where they are the ones who are taking the materials, raw materials, and putting it together and then shipping it out to other countries. So there's an added value to that. So where these countries are going to get hit, and specifically companies are, is that from the start, the value chain is now all of a sudden an increased value, costing more to build, put together, and then there's going to be an additional value added or price added when you do ship it out. So you're going to start to see it affect not just China and the U.S., but let's take, for example, Singapore, where they have $100 billion in bilateral trade with China. That can also affect with the U.S. tariffs between the trade between those two countries as well.
So if global supply chains are disrupted, then, as you've been suggesting, prices for consumers around the world are likely to rise. To what extent do you think that might occur? And indeed, I suppose, crucially, how soon?
Yeah, you know, the soon piece, it'll be interesting. I don't think we're going to see it right away, like in the next week or so. I think consumers are going to pay for this. You saw quite a few companies come out and say, well, if it's going to cost us more, and they've already been pretty lean on the structure-wise, companies are going to have to pass it on to the consumers. There isn't so many big companies that can eat a few percentage points. Maybe there's an Amazon, for example, who can maybe eat some of the cost so they wouldn't pass the whole brunt back to the consumer. But we're going to see it. Consumers are going to feel it here probably pretty shortly, in a month or two, probably. If this thing continues to go where there's no negotiations and there's more round 2, round 3, round 4 tariffs, as the administration in the U.S. had suggested yesterday.
Well, that's the thing. Everybody's hoping this initial $34 billion worth of tariffs on goods is going to prompt negotiations. What do you think? Do you think that might happen?
Well, I think we hope so. I think it needs to. I think, you know, the rhetoric yesterday I think President Trump was at a rally or a meeting talking about that they're going to continue to do this and this is their goal.
That's right.
I think for China, they've been matching the dollar amount. So if the government in China didn't go above that number, I think it's showing that it's wanting to come to the table. Well, but throws this hole in a wrench right now, as you mentioned. This is a global issue. So if it was just China and the U.S. going back and forth, so be it. But the U.S. is obviously in a trade war with the EU, with Canada, with Mexico, which you're having multiple parties. And I think the U.S. initially probably thought that they could outlast the Chinese government in tariffs back and forth. But when you're getting hit by, and as you mentioned earlier too, Russia as well, if you're getting hit in all different angles, I think they're going to have to kind of figure out and come to the table. Obviously, they're the biggest two economies in the world.
Well, now here, the next people we're going to talk about, they are the people who voted for President Trump in very large numbers, because this tit-for-tat trade war has already caused a great impact on farmers and manufacturers in the United States, particularly in the heartlands of the country. How will the formal levying of tariffs further affect them and the overall economy, do you suppose?
I mean, if you saw in the last 24 hours, you've seen that the heads of those associations, specifically the farmers in the Midwest, have come out and have said that this is going to be an issue. I'm surprised hashtag soybeans hasn't been trending yet, because right now I think that they're going to get hit the hardest. China specifically did this on purpose to make sure that they had this kind of felt, and I think this is what's going to change. Everyone's talking about, well, it's $34 billion. That's not that big of a number, but it's the business sentiment. It's the investment. It's the confidence that people are putting into where's my job going. GM came out and said, you know, they're going to have to lose jobs because of the tariffs. So China is definitely, I mean, you've heard rhetoric from the Chinese companies and workers saying that there's uncertainty that's causing this kind of concern. Now the U.S. is feeling it too, specifically there.
Now, we know foreign direct investment from China into the United States dropped very, very sharply in the first half of this year. And a UN report out in June found that global growth in FDI fell by 23% in 2017. What could an expanded trade war, and I mean an expanded trade war really, mean for global foreign direct investment, do you think?
Well, I mean, listen, everyone's trying to get capital, right? And how do you kind of keep this economy growing when you can kind of not have this restriction on capital coming in and coming out? So the past 10 years has been obviously pretty good when anybody, if you can raise money in a certain city, certain business, you can kind of go find it. Now it's being restricted, or now it's being less of that out there in sources. It kind of leads to a lot of hard things for business to innovate, hard for entrepreneurs, social, even social good, to be
Okay.
able to raise money. So I think it's going to go in that route.
And everybody from the IMF to the World Trade Organization has already warned against the damage that a prolonged trade war could unleash on the global economy. What role can multilateral financial and economic institutions play now in order to try to contain the damage going forward?
Well, I mean, the WTO came out yesterday and they kind of made this statement about tariffs and how, we can't go back to 2008. I think all they can do, because they obviously can't enforce, the U.S. administration, obviously, and the WTO are not eye to eye right now. All they can do is push rhetoric, kind of hopefully push people to come together. I think they've got to play peacemaker as much as they can,
Yep.
to be able to cause this kind of rationale or not this thing to escalate further and further. There's someone has to step in, and if it's not them, it's going to have to be other countries.
And Ryan, just in 10 seconds, best case scenario as we go into the weekend?
We get a deal done, but I don't know about that.
Thanks very much. I appreciate it very much. Thank you.
Thank you.